I mean, there are a lot of other companies in the world that would be able to build like a very good earbud, but it just, Apple has a specific protocol that they've built into the iPhone that allows AirPods to basically connect to it, and it's just much more seamless because they've enabled that, but they don't let anyone else use the protocol. If they did, then there would probably be much better competitors to AirPods out there. And whenever you push on this, they get super touchy, and they basically wrap their defense of it in, well, if we let other companies plug into our thing, then that would violate people's privacy and security. It's like, no, just do a better job designing the protocol.
That was Meta CEO Mark Zuckerberg on the Joe Rogan podcast on Friday, taking a shot at rival Apple. Joining us right now is Gene Munster. He is Deepwater Asset Management managing partner. And Gene, you own shares of Apple. What did you think of what Mark Zuckerberg had to say? You think there are any implications over the longer term for Apple as a result?
I don't, Becky. I mean, this is bad blood between the companies. Zuckerberg has been on this tirade against Apple for a long time. Of course, he doesn't like what they're doing with their App Store, given it basically blocks them out. It makes it very difficult for Meta to essentially get any sort of edge in terms of having a direct connection with their customer. And so I think that has been really the essence of what has pushed this as far as it has. So I think this is bad blood, and I think that they've tried to make some peace, but it just hasn't come to fruition. At the end of the day, this concept, he said they just haven't innovated. Well, they have. Services, watch, AirPods, it's 30% of their business. They have stalled in terms of like Vision Pro, car, so that has not taken off. But at the most basic level, Becky, I think this is just two companies that don't see eye to eye. And the fundamental reason is because Meta feels that Apple has control of its destiny, and Zuckerberg does not like that.
Is it anti-competitive behavior that rises to a regulatory oversight level?
I don't think so. I mean, this has been part of the conversation of regulation, Apple, the App Store, how they operate that. Can you have independent app stores and the steering? So all that's related to, how this Zuckerberg's commentary has kind of played out. But at the end of the day is that Apple has been leaning back. Zuckerberg said it in that prepared comment there, is that Apple leans back on the fact that they ultimately need to have this kind of oversight because of security and just a cleaner app store. And I think that that has stood up on the regulatory front. And so I would be really surprised to see any sort of substance changes to the policies. I don't think that there's going to be anything that's going to be elevated against the App Store in the next several years.
Gene, last week was a pretty rough week for the tech stocks. You were looking at the NASDAQ pulling back more than 2.25% just on the week alone. You're now talking about down more than 5% from the all-time highs. And there are a lot of people wondering what 2025 is going to bring. You think there are two huge things that are happening this week for tech. The first one kind of caught my attention. The CPI numbers tomorrow are incredibly important, you think. You want to explain that, why CPI can have such a big impact on tech stocks?
It's the relationship between interest rates and risk. And of course, if rates stay up higher for longer or become elevated, it makes it less attractive for investors to go into riskier assets like owning stocks. And so I think that relationship, we saw it, of course, play out in a really big way when rates were going up a couple of years ago. But this still kind of plays and nags at investors, what's going on with interest rates. And I think the reason why the CPI number has maybe an outsized impact this week versus maybe 6 months ago is that the market is higher. And I think that investors, tech investors, are looking for that reason to sell. And this could be a hot CPI number, could be a near-term catalyst around that. So I think that this is going to be a messy week. There's a little bit of a counterbalance to this week, too, because TSM, who's already given their December revenue numbers, but they're going to be reporting on Thursday, giving outlook for this year. Of course, they're critical in terms of building a lot of these advanced nodes for AI chips. And so I think the AI trade might get a little bit of some reassurance with that TSM commentary. But overall, this is going to be a messy week. And of course, all eyes are going to turn to what big tech is going to say next week.
The big issue, you think, is AI is going to be something that continues in reality, not a hype machine, at least for the rest of this year and probably the year after that as well.
Undoubtedly. And I just want to kind of put some quick parameters around that. For most people, AI is just a buzzword. The daily active users of ChatGPT is about 150 million, 2.5 billion when it comes to Google. And so this is still relatively small. So I think it is an undeniable truth that the substance of AI will exceed the hype. There is a question about how to invest in that. Will the Mag 7 continue to lead the way? What we have seen over the past at least a couple weeks here is that some of these smaller companies, if you measure it by the Loop, L-O-U-P, Frontier Tech, these Frontier Tech companies, that's up 2.5% this year. So these are some of the smaller type of AI companies. So Becky, I feel very confident that this AI, we still have a couple great years left. It will end in a spectacular bubble. I do think we're going to see better performance on the margin with some of these smaller companies in 25.